Hello, everybody. Happy Cannabis Day. I'm here with my cohort, Mr.
Co-host?
Dr. Ippolito Milewski.
Edamame.
We're going to have a discussion about the speed of light today, the meaning of life. Terry Booth will be joining us shortly to announce his resignation from, oh no, that's right. He's already resigned. He's not coming.
He wasn't going to resign on the show.
He wasn't going to resign on the show.
He's resigned to that.
He's resigned to not show up on the show because he's going to resign before he gets his chance on the show. Big development in Aurora. I mean, $1 billion write-off, 500 employees gone. They still got $146 million in cash, $45 million restricted cash. They've got a $250 million debenture coming due, or is it $200 million?
Who's the biggest shareholder of that company?
Of Aurora?
Yeah. Do we know?
Well, we can easily find out. We will go have a look at SETI. But my question is, so they've got all these facilities around the world that are sort of now half built, and they don't have money to finish them. And so as far in terms of collateral for real estate, I don't think they're really worth that much because they're sort of half-finished marijuana operations.
Yeah.
But so, yeah, what do you think, Ed?
Well, it just shows you that we were in a bubble. We were in a bubble, and everybody's looking at things through rose-colored glasses. Mm-hmm. The price of the stock will make you do that.
Yeah.
But when reality sets in, and most of the fundings now are convertible debentures, which means there's an interest clock ticking, and if you don't have suitable cash flow, mm-hmm. how do you pay off the interest? Well, and so I'm sure that whoever funds you anymore, they want that debenture tied to assets.
Yeah, well, we're going to be looking into that. We're going to try to decipher exactly which covenants Aurora might be in default on if we dive into the CDAR filed documents, which we'll try to do during the show. But today we've got a big lineup of outstanding guests. Dan McDermott from thechartguys.com, of course, joins us this week for another analysis on the cannabis market from a technical perspective. Lance Ippolito from the Future of Wealth is here again to talk about the S&P and FANG stocks from an options perspective.
Right.
Robert McKay, who is a director of RJX.A Mining, is here to talk to us about the 800-carat Nipissing diamond that was found in northern Ontario back in the early 1900s, and RJX.A is now trying to find the source of that 800-carat diamond. And they've already found kimberlites. That's going to be fascinating. Carrie Howe's joined us from Relay Capital. Carrie is a up-and-coming, soon-to-be regular co-host with us on the show. Dinesh Kandanchava, you might remember that name from Patriot One, which was one of our big wins in 2018, 2017. He's now heading up a company called Windfall Geotech, which has a machine learning technology that helps them find landmines in war zones. Bruce Campbell finally joins us here from StoneCastle Asset Management for the StoneCastle Investment Management, Cannabis Weekly Update. But let's hear from Dan McDermott right now. Dan McDermott from the Chart Guys joins us again this week. Hey, Dan, how are you?
Good, James. How you doing?
I am feeling fine, thank you. Quite the uproar in the market with the departure of Terry Booth from Aurora. A little bit of life in that stock. What's the sector telling you today?
Well, the sector is certainly in despair mode. We've seen weakness the past couple days, and now it's just really boiling over. And we're looking at ACB with little support in this range, down at 150, which is the lowest price we've seen in this whole pullback. That's pretty much all we're looking at. We then had a short report released on CGC. They're down 6% at the moment. No short-term catalysts on the horizon. We're pretty much just looking to the election, which is still 11 months away, 10 months, 10 and a half months. So bottom line is we are in a despair point of the market cycle.
Okay, well then let's talk about something that's more fun. How about Tesla?
Tesla has been a day trader's dream. So I've been saying to people that watch my videos, 2017, 18, and 19, CGC, hands down my most profitable ticker by probably 1,000% plus from the second most profitable ticker. That has been my horse. In 2020, I am red trading CGC, and Tesla has now been, it's the complete opposite. Tesla has all of my profits in 2020. So I, like many traders, are moving on from less opportunity in this sector, more opportunity elsewhere. You better believe I'll be back when things change. But as of right now, the opportunity is elsewhere.
Sure. And in terms of the FANG stocks, they seem to be, doing what they're usually doing, which is more or less incrementally rising over time. Is there any reason to think that's going to change?
No, my outlook on the market is as long as we're in a weekly uptrend in the S&P 500, all dips are for buying. And it's been working time and time and time again, maybe 4 times in a row over the last 6 months. And eventually it won't work, absolutely. But until that happens, doesn't matter what the headline is to me. I'm looking to buy the dip if we are in a weekly uptrend. When we lose that weekly uptrend, I will be singing a different tune. But that is not the case.
Sure. And so the S&P generally still FANG driven for the most part?
FANG, tech sector has the most exposure. We've got Apple and Microsoft very high on the list, but all those names, Facebook, Netflix, Amazon, even the names that had a bearish reaction to their most recent round of earnings, like Facebook, have completely recovered and bounced to higher highs. So overall, we got Amazon at all-time highs today. Market hit all-time highs yesterday. Apple's just under its all-time highs. So very quickly, the market has disregarded those virus fears for now. And the question is, how long can the Fed keep pumping money in and keep this going? I don't have an answer. So again, keep playing what's working until it stops working.
Yeah, I guess that's the bottom line, isn't it? So touching briefly on the coronavirus, I mean, it certainly caused some market gyration, but not nearly as much as I would have expected. Do you think that the recovery that has clearly instilled itself in the market is a result of the headline catalysts like Gilead is coming out with a virus. All these other companies have said they've got treatments coming down the pike. And then, of course, Donald Trump said that the virus has been shut down 5 days before declaring it a public emergency. So I guess that's all good.
It's definitely a factor. For me, I usually use price levels to determine anything, and I've actually held off watching. Netflix had a special, or one of their new shows or documentaries called Pandemic. I've intentionally not watched that because I didn't want it to influence my technical analysis. But the headline for me that was the turning point was China is going to inject $174 billion into the market when it opens after their long holiday. And that's just the market saying, okay, we've got central bankers and those in power continuing to prop things up. We're fine for now. And that kind of sentiment transitioned into the U.S. market buying the dip.
Right. I was looking at a chart of the entire derivative sector. And it's now estimated to be total notional value of as high as $1.2 quadrillion, which is the first time I've heard that measure used. But to me, that sort of indicates that, well, if we're going to measure the derivatives market in quadrillions, then there's no reason to stop printing money if all of the economic perceived benefit comes from printed money. Then how soon till we're measuring stimulus in trillions and quadrillions and quintillions?
Yeah, it's over my head from a macroeconomic standpoint. That's obviously not my specialty, but it's the kind of thing where, the conversation that someone posted recently where they have with people, where people say, I'm not bullish in this market, it's manipulated. Well, the question is, which direction is it manipulated? The answer is up. So why are we fighting these market bulls? If it's manipulated to the upside, yes, it can be a house of cards. That's what stop losses are for. Being protective is absolutely always important, but don't fight these bulls.
Right. Dan, can I ask, what is your preferred trading platform?
I use Fidelity, and I've always used Fidelity. I'm on 9-10 years at this point. I just haven't had a reason to switch. When we had the US go fee-free recently, they were one of the last companies, and I remember messaging them being like, all right, I'm going to give them 1 week, and they finally did go to 0 fees. I like their customer service. I have no affiliation with them, but I haven't ever had enough of a reason to leave Fidelity.
And can you trade aftermarket and pre-market with Fidelity?
Yeah, it's 7 a.m. to 8 p.m.
Oh, perfect. All right, Dan, well, let's take a look at some of the charts here now.
So we'll start it off with ACB, and a big bummer for the sector bulls, as ACB over the last week, pretty much from end of January to start February, was the strongest of the major names just because it was able to see this little daily higher low and higher high. Obviously, that faded very quickly with the big gap down, and here we are near the low of the reaction during regular trading, 165, and after 165, it's just 163 and 150 as the only short-term support levels nearby before we are back in free fall mode. So 150 now becomes the most important support level. It wasn't just the fact that we had Terry Booth leaving, but we also they gave some insight into what they're expecting for their earnings, something like 60 to 64 million, maybe a little bit more than that, 62 to 66, something along those lines. But just no good news in the sector is what it boils down to. Very little to get retail traders excited about. And for CGC, it was perfect timing to release their short report. I have no doubt, call me a conspiracy theorist, but I would speculate that if 2134, which is the only support level nearby, if 2134 had held yesterday and we closed at the high of the day, I don't think we see that short report today. I think we see that short report today because 2134 broke. The next support below that level is 2014, a 6% drop. We have the bearish cloud over the sector from ACB this morning. It was just the stars aligning. And it's the kind of thing where if I just put myself in their shoes, if I'm the kind of trader that has reports that people are going to react to, I'm going to wait to put those out until the setup is ideal. And yesterday into today was the ideal setup for the key support break, the lack of any support directly below it, and the bearish piggybacking off of ACB. So I personally don't care what the report says whatsoever. All I care about is what the price is doing in reaction to it. We're still watching a weekly uptrend. Obviously, at this point, we pulled back from the high very significantly, 15%. More than that, we're looking at more like 30% from that high. And we're still in a weekly uptrend. 1848 is the must-hold support. That's still 5% away. So we could still maintain the weekly uptrend if it's a bullish reaction to earnings. So those earnings that are approaching, we have an ETF rebalancing at the end of next week. Those are two events that need to be bullish to save this weekly uptrend. If it is a bearish reaction to earnings on CGC, the monthly bear flag possibility is going to increase a good bit, and we're going to be looking back at 1381 if it is a bearish reaction to earnings. So that's what we're looking towards in the short term right now. What is Canopy's reaction to earnings going to be? And here's the S&P 500 to check in. Weekly time frame. We're scared about the virus. What virus? Very short-term memory of anything fear related. Look at that recovery. 1, 2, 3 gap up opens in a row. All-time highs, 2 out of the last 3 days. Market bulls continue to keep complete control. And all that does is just twist the knife a little bit harder into the MJ sector bulls who see all these other sectors performing really well continuously and seeing no benefit from that. So patiently waiting for opportunity, volume, volatility, and hype to reemerge in this sector, but might have to wait until fall of this year for the election cycle to do it.
Hey, Dan, thanks very much for joining us today. We'll see you again next week.
See you next time, James.
If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment. Well, yeah, so ChartingManDan is trading like a madman and happy about the FANG stocks going higher and the S&P, and it's just like, I mean, if you live in America and you're a trader in the market, like you really live in a rarefied place.
Yeah.
Like you can't lose. You cannot lose. I mean, the only way you can lose is just by selling too soon.
Or shorting.
Or shorting, yeah. Like I imagine, so after Tesla hit $900 plus, where did it drop back to?
Well, right now it's about 740. It hit 968, I think.
Right.
And it came off of there pretty fast last couple days. But yeah, And what's interesting is that Musk is basically saying he's not raising money. Like everybody's saying he should be raising a lot of money here because he can.
Right. And we were taking a look at the insider holdings of Aurora Cannabis to try to get a sense of who is left in management and on the board of directors who has a really firmly vested interest in saving this company. And the easy answer is looks like, well, the CFO. The CFO has got 1 million shares through a grant of rights. It's not clear whether it's not an option per se, and maybe it's RSUs, but he's got 1 million shares. But even Terry Booth leaves the party with a grand total of, I think it's, where is it here? If we pull it up, well, it's very small, but
21,000 shares.
21,000, yeah. I mean, there's really, I mean, most of the larger holdings in the insider trades are all as a result of grant of options or rights, which would be RSUs, I would think. And there's, like, management has not put any money at risk in this company to speak of. And so when it comes to, like, is the company going to get turned around because of a new CEO, or is the company just really being shepherded into bankruptcy? And I'm betting, actually, at this point, that it's going to be the latter, barring some pretty impressive miracles. That's my call. That's my call. Anyways, Lance Ippolito is here for the Future of Wealth. Lance Ippolito is back from the Future of Money. Lance, welcome back.
Hey, James, how are you?
Lance, where are the opportunities today in the Future of Money?
We are seeing a complete 180 from Friday. We've had, with the coronavirus, we've had the market sell off. The Dow was down 600 points on Friday. And then today, you had the Shanghai open up, limit down about 9%. But you actually had the China ADR stocks like a Baidu, a Baba, JD. These stocks are raging higher today. Tesla's up $101 now. That I'm speaking up over 15.5%. You have Google earnings after the close. The money, the big institutional money is pouring in today. Just a complete change. And I think these FANG stocks, your Google, your Netflix, we saw it with Amazon Thursday night as they reported earnings. The stock was up 200 points. You're seeing big rotation into tech, and I think it's going to continue. There's nothing really slowing down this market, even the whole coronavirus taking over.
Sure. So in the context of a global marketplace and a connected marketplace, is it safe to say that large institutional pools are selling China and buying U.S. tech, FANG stocks in particular?
I think you're spot on right there with it.
Okay, so this is interesting because if you look at technically the trading of the FANG stocks tend to fall, like the RSIs have been through the roof. The Bollinger Bands have been, like, it's trading outside of the B bands, where normally in a traditional market you would be expecting them to fall back into the pattern, and that's just not happening because we're actually seeing exponential growth of cash into the US market at the expense of the Chinese market, fueled by coronavirus. But I mean, Europe's looking weak, China's looking weak, Asia by extension, and so it looks to me like there must be one hell of a long trade option side in the US market.
Well, yeah, you're completely spot on. And what I'm looking at actually right now is these stocks like a Tesla, like a Netflix, that have massive short sellers. You know, we have Chanos with Tesla, Greenlight Capital, David Einhorn just came out ahead of Netflix earnings, short Netflix, and these stocks are causing massive short squeezes. So I'm actually looking at Netflix now that we speak, because I do feel like Tesla is a little overextended. I know, it can have a crazy high RSI and it will continue to move higher, that RSI, but the stock keeps going up. I'm looking actually at Netflix. It was trading around 340 on earnings. The stock actually went lower, about 2.5%, 3%. Now it's printing around 356 and up 3.1/3% today. I like even going out of the money on options, looking at about 30 to 45 days out. and looking at some of these Netflix 380 call options. So again, they're out the money, but they're cheap, and you get a couple 3% up days, and Netflix is going to be right there.
Right. So the guys who are short these stocks, I mean, those are some big names who can probably afford to be short for quite a while, but nobody can afford to be short longer than the market can afford to be irrational. What are they banking on? Just a technical cover, or are they actually looking at a fundamental weakness from the overbought state driven by this explosive growth in capital flowing into those names?
Well, the rationale in Tesla was Solar City was a fraud. Tesla's running out of money. They're in debt, and they're not producing. That has completely changed. Every analyst on the street has upgraded Tesla over the past 30 days, and the stock is soaring. It went from 300 to now 755. With Netflix, what's actually insane about this name is they're burning through cash. The fundamentals, in my opinion, and from these large hedge fund managers, they're not there. They're spending so much money on content, and subscribers, international subscribers, are actually going down. But, and this is huge, especially for Netflix, they continue to, even with bad earnings, even with bad fundamentals, they continue to move higher. And once these names get going, this massive short squeeze occurs, and it just really drives the prices higher. You could call it, with Netflix doing reverse splits, whatever you may, financial engineering, but they continue to move higher, and these shorts eventually have to throw in the towel. They have to cover, and when they do, that's just another bullish sign for these big momentum stocks.
Yeah, you bet. So is it safe to say that option side, this is the only game in town right now?
No. Is it fun? Is it entertaining? You're darn right it is. It's a fun game. There is earnings approaching, and we saw Amazon report. We had Facebook actually report some pretty bad numbers, especially international. You do have opportunity in earnings. In fact, I was looking at Hartford Financial today. I know some big, large tech names and retailers start to report earnings like Capri Holdings, TPR, which was the old Coach, some of these luxury retailers. You have the cruise liners like Royal Caribbean reporting earnings. There's opportunities because a lot of these names, especially with the situation in China, the transports, the airliners, they've been all over with the whole coronavirus. There's opportunities out there. Do I think they're, opportunities that are 3 to 6 months long? No. But there's things in the options market that you can play that is short dated, that is news, that actually offer favorable risk versus reward if you want to be active.
Sure. I noticed that pertaining to the coronavirus stocks, as the new category has emerged to be called, Gilead came out with a statement suggesting that they were actively developing a vaccine and a treatment, and cautioned, though, that it may be up to a year or at least 10 months before this was ready for mass market deployment. That had a beneficial influence on the stock price of Gilead in the nearer term. But is that something where, there's longer term opportunities in companies that are in the business of creating vaccines for situations like Ebola and coronavirus?
I think, and you brought up Gilead, which was a perfect example. I think a lot of these names, like Gilead, for example, it actually printed up to about 68.5 right at the open. Now it's about $2 off the highs. I think if you're in these names, it's sell the news. So you get that pop, you take your profits, and you move on. I don't think it's you buy and hold them hoping they're going to come, with a cure that, it could be months down the road. It's just, if the money's there, why not take profits, put it in your pocket, and move on to the next opportunity?
Sure. So specifically, any parting advice for trades that you think are particularly attractive at this point, Lance?
I think you have the airliners that, yes, with all the negative news and with all the stopping flights from China, I think if you actually want something, that is cheap, that is beaten down. I actually think airliners and transports right around here, it's not a bad thing to start bottom fishing, especially if you're, let's say, a buy and hold investor and you want to buy something that's beat down. You're having opportunities, and as a trader, as an investor, that's all you can ask for.
Sure. Now, when you say airline stocks, are you focusing on the U.S. names only, or are you including, things like British Airways, Qantas, etc.?
I tend to like the airline stocks that management is management and the fundamentals are there, and they've had a history of reporting greater than expected results. Specifically, like a UAL, they came out with good numbers. The stock's about $6 from the pre-earnings levels. And another name I like is Alaskan Airlines, ticker symbol ALK. Really good management there. And they kind of they're really the only airliner that goes in and out of Alaska from the last time I checked. So two names there that I find very solid. And names like an AAL, the fundamentals aren't there, and they've just had too many problems, especially with the whole Boeing situation over the past few weeks as well.
Sure. All right, Lance, that's a great update as usual. Appreciate your contribution. We'll come back to you next week. Thanks for joining me.
Thank you, James.
If you like the show, you'll love our website. Visit us at www.midasletter.com for interviews with key CEOs, cannabis news, and to subscribe to our newsletter. So, what do you think, Ed? Airline stocks are not something that we're going to look to own anytime soon, are we?
Yeah, I've always found that, why would people get in that game?
Yeah.
I mean, the only thing, if something goes bad, it's really bad.
Right. We're looking at some of the cannabis indexes right now, which are uniformly off. Oh, what? Oh, okay. I'm looking at some indexes which are uniformly bad. Everything is red. Large cap is down a total of almost 6% today. The large cap index probably driven, let's see here, if we take a look at Canopy Growth is down 6.4%. But Aurora is down almost 20%, down 54 cents on the day to 225. So all the predictions of the individuals who suggested that the stock would go up on Terry Booth's firing are being proven uniformly wrong.
When did he resign? Today or yesterday?
Yesterday.
It did go up yesterday.
Well, he resigned after the word came out after the market was closed. Oh, look at that.
Yeah.
My microphone fell off. Woohoo! Anyway, so coming up now, we have an interesting story about an 800-carat diamond found in Ontario in the early part of the last century. Robert McKay is here. Robert McKay joins me now. He's a director of RJK Explorations. Robert, welcome.
Thank you.
Robert, in a nutshell, RJK Explorations has changed from a focus on gold to a focus on diamonds. Can you describe the process by which that happened, please?
Yes, Glenn Kasner, who I've known for 35 years, saw a little website in Kirkland Lake that referred to a diamond property south of Cobalt, Ontario. So he started reading about it, and he remembered the prospector that his kids had played soccer with the prospector's kids growing up. So he contacted them, and that was in August of 18.
1918?
No, sorry, 2018.
Oh, okay.
And worked with him for till February, and convinced him to join with RJK and option the property.
Okay.
And that's when I got involved, because I read about the acquisition of the Bishop claims and the search for the Nipissing diamond. And I immediately remembered my geology professor at the Haileybury School of Mines, Dan Atchison, saying that he always hoped that somebody from the mining school would find the source of the 800-carat diamond. So I phoned my brother, who was also a graduate of the mining school, and he remembered that. And then I talked to Glenn Kasner, and he remembers Atchison saying that. So then I sent 4 geologists at the Prospectors Convention last year to see Glenn and to see what they thought of this. Two of them had worked in diamond exploration. One was an analyst, and the other one was a director of my last company, and they all came back with glowing reports. Wonderful people, honest, very good research. And so that's when I realized why Glenn did the deal, because the leverage to discovery was enormous. If you find the source of an 800 carat diamond in a mining camp, that will create tremendous excitement, and people that own the company will make a lot of money.
Okay, so the 800 carat Nipissing diamond was found at what year?
Okay, it was found between 1903 and 1905.
And what happened to it?
It was found by somebody in that region, and it ended up with a very famous prospector and a settler, Father Paradis. And he made a drawing of it. And he was a very accomplished artist. And there's a drawing of an 800 carat diamond, pen and ink, beside a Buffalo 5-cent piece, US 5-cent piece. And so in our research, we found that he was related to the MP at the time for the Nipissing district that went all the way up to Hudson's Bay, and that fellow's name was Alphonse Aubin.
Okay.
And he acquired the diamond, brought it to the legislature here in Toronto, showed it around, brought it to Montreal, got it authenticated, and then personally brought it to Tiffany's in New York to get it cut. And so Tiffany sent a crew up in 1906 to look for the source of the 800 carat yellow diamond. And then the trail gets cold. Cobalt was booming for silver. Nobody really knew how to explore for diamonds. And so it went till 1995 when the diamond rush was going on in full blast in Canada. Dr. Keith Barron did some research, and he did all the original research and found the newspaper articles, the mining journal articles, the jewelers articles, and he went up there and started looking for the source of the diamond also. And then, of course, the BRIEX happened and money dried up, and so it went cold again until 2014 when the prospector Tony Bishop decided to look for the source of the 800 carat diamond, because he had met Dr. Keith Barron in 1995, because Keith had come to see Tony about small-scale placer mining. So in 2014, Tony started to do all of the exploration work, self-taught, learning how to process indicator minerals, which are the size of a grain of pepper. And so he built his own lab, learned how to process them, and discovered that, in fact, where he was looking had all of the indications of that there's kimberlites there.
Kimberlites being
the host rock for diamonds. And so geologically, it's the perfect place for diamonds. De Beers was looking since 1962 in the area. They were there for over 20 years, from 62 till 1985, looking for the same thing we're looking for. They're back again, and they're there very aggressively now.
Okay. Looking in the same property that you're looking?
No, looking in the same area.
I see.
So when we acquired the ground from Tony, we realized that these diamonds could be, if they're on the next person's property, we could be close, but it's not going to do our shareholders any good.
Right.
So we went quiet and we acquired all of the ground in cobalt. We brought in top geophysicists, geochemists, taking a look at everything that we'd found, the geophysics, the geology, and we realized that we had to acquire all of the ground. So fortunately, all of that ground had been acquired during the cobalt boom, and when the cobalt boom collapsed, so did the excitement about working in cobalt, looking for cobalt. Mm-hmm. So we were able to do very good deals for our shareholders with very little money to acquire the rights for the whole camp.
You've located kimberlite pipes?
Yes.
Not dikes, pipes.
Pipes.
Okay, and so the next step is to drill some holes?
Yes. We drilled the dike. It was about 3 meters wide on surface, and we drilled about 15 meters of true width at depth. We put one hole into it just to test the magnetic susceptibility, because that helps us identify other targets in the area with the magnetism. So there was another target about 400 meters south of that, about 200 meters perfectly round target, mag low, magnetic low, and so we put a vertical hole into it and an angled hole into it and hit kimberlite. Mm-hmm. And so it's the first true new discovery of kimberlite ever in the cobalt camp. It's there have been Lamprophire diamonds and Lamprophires, but for actual kimberlite, it's the first time it's ever been drilled. So it starts to prove up our theory that indeed the geology is right. The environment was always been right for emplacement of kimberlites, because they come up through the same fault systems and cracks in the Earth's crust that the 600 million ounces of silver came up.
Just for comparison's sake, the Diavik mine mm-hmm. in the Northwest Territories, which has produced how many hundreds of millions worth of diamonds, mm-hmm. That's all from one pipe, correct?
No. All of these big mines come in clusters.
Right.
The Diavik, one pipe is actually one open pit is actually two pipes, and they're currently looking at opening up another one.
Okay. So what's next for this project?
So next is to continue drilling on the Con properties. We're almost licensed over on the Bishop claims, so we've got 2 parallel targets that we're going to be working on this winter. So we'll be working right through till May. I think we'll be drilling between 15 and 20 targets this winter. And once we get enough data and enough core to give a good representative sample of the cluster, mm-hmm. we'll be sending those that away for caustic fusion analysis.
Okay, well that's great. So there's lots coming. We'll leave it there for now and come back to you soon. Thank you very much for joining us today.
Thank you.
If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment. Diamonds. She comes across like diamonds, diamonds, crazy in love when the lights are low. That's my Max Webster soliloquy for today. Anyways, Ed. Yeah, the whole sector is down. Aurora's down 20%. You know what stock is up today in the cannabis sector? Valens Growworks is up 4% today. VLNS, yes, on the small cap market. What other stocks are up today? Let's see here. If we go to the CSE index, none of the stocks on the first page are up. Everything's down. Cureleaf is down by 2.82%. Green Thumb Industries down 3.6%. TrueLeaf down 2.7%. Harvest Health and Recreation down 0.5 point, which is actually not bad in this market. Cresco Labs down 5%. Forefront Ventures down 3%. Ianthus down another. This is just going from bad to worse. I mean, we had the recovery that started right there at the end of December, and now it's basically given it all back and looks poised to go much lower.
You look at weed always as a sort of barometer, and weed got to $33 or something like that from about 17, almost a double.
Oh, you mean recently? Yes.
Over the fall.
Right.
Fall towards the Christmas.
Right.
And now it's back to 20. Today it's down a couple bucks, down to 26, but looks like it's trying to get back to testing the lows.
You know, it's interesting, but every CEO that we've had on the show has gotten fired from all of the big companies, almost. The exceptions being, and I'm afraid to list them because I might jinx them, but I mean, if you were to look at companies that have collapsed in value who might be looking to change management, certainly Hexo is up there.
Right.
Organogram, I don't think so, because Greg's done a hell of a job, and he came in and rescued it from the former CEO. What's his last name? I can't remember his name suddenly. Charlotte's Web has really collapsed in value, down from over $20 to $8.90. They might be looking for it, but that's run by the Stanley brothers, and I don't see that eligible for.
What about the one that Kronos? How's Kronos performing in this?
Well, Kronos Group has bigger problems. I mean, Max Cherney at MarketWatch published a story about the CEO, Mike Gorenstein, being a member of the private equity group Gotham Green, that they sold the Lord Jones line to Kronos Group for $300 million, and the private equity firm, of which the CEO of Kronos is also a member, made, you know, that was a big price tag for a company, and it's certainly questionable as to the value of that. Lawsuits are flying around on that front as well, and so yeah, it's just like, it's really just an ugly industry.
Yeah, you get the sense that anxiety sort of rises when people lose a lot of money.
I think so.
Is that sort of something we can hang our hat on?
I think so. Tell me what you think of this, you lovely lady, to be a co-host for us. Carrie Howes joins me now. She is a capital markets professional from all over the planet, and Carrie has lots of experience across resources and biotech and cannabis. And Carrie, welcome.
Thank you.
Carrie, let's start with a quick rundown of where you've been hanging your hat in the last 10 years, career side.
I recently moved back to Toronto a year ago now from Dubai. I was in Dubai for 9 years, but mostly working with the European markets. So I was commuting pretty much from Dubai to London and mainland Europe to hold roadshows.
And how's life in Dubai? I've never been.
It's a fantastic place to live.
Is it?
Yeah, we
Really?
offer roadshows there too.
Really? So I guess it's all sunshine.
Sunshine and tax-free.
That's very compelling.
Yeah,
Let's not get stuck on that though. So I'm curious now, we're at this point in the cannabis industry's evolution where the investment attractiveness of the sector is down because of the contraction in prices. But one of the things that's always been a mystery to me is how the cannabis industry has not quite taken off in Europe as it has on this side of the Atlantic Ocean. Why is that?
Predominantly because of the restriction to buying in Germany and in the UK, and that still hasn't let up except for on medicinal type investments. The Frankfurt Exchange had a number of cannabis companies as a dual listing, and they were, the majority were delisted if they were not medical marijuana focused.
Oh, so if it was a Canadian company that was listed in Frankfurt that had a recreational line, they were disqualified?
Exactly.
Oh,
exactly.
Interesting.
So, and they were delisted very quickly. So it happened within a number of months. And so that, I think that discouraged a lot of the cannabis companies from road showing in Europe and raising capital over there. And by the time the stocks had a run on this side and they went over to Europe, I think the Europeans felt as though they perhaps missed the mark. So they were watching intently and hoping that they could possibly get in on the next round or the next wave, which hasn't happened yet.
Right.
Yeah.
I've heard that there's still there's only 30,000 patients who are prescribed cannabis on all of Germany at this point.
Yeah, I don't know the answer to that, but I know that they are moving in that direction. Germany is a very natural country, and they're big on biotech and on medicinal. I know medicinal cannabis is something that they're looking at, and heavily promoting at one point as well. It just hasn't taken off.
Right. Are there many German producers of cannabis at this point?
I know of some that are growing over there and then some are distributing over there, but I don't know the answer to that. I don't know how many are actually.
To what extent do you get the sense that Germany is trying to protect the opportunity inherent in the evolution of cannabis for the German people?
I would think that that's likely the case. The Germans do like to protect and have their own.
Sure.
And time will tell, I think, when we see what companies start to go through that whole stock listing process, both on German companies as well as Canadian companies listing over there.
Huh. And what is the attitude towards cannabis in Dubai?
There isn't one.
There isn't one?
No.
There's no attitude
Well,
whatsoever?
it is very much an illegal substance still in Dubai, yes.
So no medical?
That there absolutely is a medical market. It would come from a fully biotech way.
So
I have not roadshowed a medical marijuana or a marijuana company of any sort in the Middle East.
Really?
Yeah.
So if, let's say that I have a cannabis company that has very much a biotech Phase 2A trial ready to go, designed by the London School of Economics, that's going to create a compound specifically targeting traumatic brain injury, which affects upwards of 5 million Americans every year. Would that be something that the people in Dubai would look at?
I think there is they are extremely advanced when it comes to the hospitals. There are very advanced. A lot of the research comes out of the Middle East.
Right.
It is a hub for the entire Arab Spring.
Right.
Has come into Dubai and into the Middle East and the UAE, and I think that there would be, from what I've heard, there is a focus happening there. I just don't know how, on the investment side, if they are, as individuals, allowed to buy stock.
I see.
But I know research is being done in the hospitals there.
So is there any likelihood at all that the very liberal attitude towards recreational cannabis that we see in California, for example, is there any chance that that's ever going to happen in the Middle East?
I don't think so.
Really?
Not for many years. Not in my lifetime, no.
Because they're very conservative
yes,
there.
it's an Islamic state, so it would not be considered to be with the Islamic culture.
Sure. Can I ask, without sounding like a sexist jerk, what it's like for a woman to live in Dubai?
Actually, it was great. It wasn't what I thought it was going to be.
I didn't have to
cover.
Oh, you didn't have
I didn't
to cover.
No. But they expect a level of respect, which you give. You don't walk through a shopping mall with short shorts and tank tops, and there are a number of tourists who do that, and there are signs that say, "Please respect our culture," and it's not a society that you are led to believe through the media that women are not treated as well, and that's not the case at all. It's an 85% expat, and the expats get on very well with the Arabs. It's
fascinating.
Yes,
I really should go.
You should, and they're growing a society. It's a city that's grown very, very quickly. It's only 50 years old.
And to what sense would you categorize Dubai as a sort of a non-secular government? I mean, to what extent does religion enter government?
It very much does.
Oh, okay.
The Sheikh Mohammed he's the face of Dubai as well, but he's also very liberal, and he promotes Dubai as being a happy place and trying to get investment into Dubai. But religion plays a big part of the government there as well.
Right. Interesting. Okay, so now you've spent a lot of time in Europe, more so than in the North American investment market. How would you categorize fundamental differences in the approach to investing in the European community versus the North American one?
Well, the way I used to see it was that the Canadians were showing the deals first, and then the Europeans would often get what was left over.
Right.
It would depend on the broker, depend on the deal. Europeans obviously would say to the Canadian companies, "Why are you coming here? Have you reached your maximum capacity in Canada or in North America? And what's your purpose of coming to Europe to get investment? Because predominantly in the past, you would see African focus coming out of the UK. So African mining, the UK and Europe understood certain types of mining investment and resource investment that the Canadians didn't. Not a lot of African investment came out of North America, for instance. So that was interesting. It was a geographical play. But the Europeans have for quite a long time followed the Canadian stock exchanges, and they hold accounts over here, and it was there were brokers over the course of the past 25 years who have gone to try to get those accounts in Paris and London and Switzerland, of course, and the Swiss are well known for being gold investors.
Interesting. Is there as much of a high-risk culture when it comes to startups in Europe as there is in Canada?
Absolutely.
Oh, they are. They're risk tolerant.
Risk tolerant, yes, I would say there are, because there are a number of companies coming out of France.
Right.
If there is a French exchange, there are other exchanges over there as well. That the Canadians, you rarely see Canadians buying on the European exchanges.
True.
But you see the Europeans buying on the Canadian exchange, which is quite interesting. But
right. Interesting. All right, Carrie. Well, we're going to have to leave it there for now. It's been our sweet spot of 10 minutes, so we'll come back to you in due course. Thanks very much for joining me today. If you like the show, you'll love our website. Visit us at www.midasletter.com for interviews with key CEOs, cannabis news, and to subscribe to our newsletter. Yeah, everybody wants some. I want some too. Okay, moving right along here. If you recall, Patriot One Technologies was a big winner for investors. They've had two announcements recently. They got a $780,000 grant from Innovations Canada, and then they got a $970,000 contract for their subsidiary, which was called, can't remember. Anyways,
Can't
big
remember.
win.
What would you call a company can't remember?
Because it's a good name. Nobody will forget it. Do you remember the name of that company, Ed?
What?
It's the company I was just talking about.
What's my favorite word?
Can't remember.
What?
Okay.
What's my favorite word? I don't know. I just told you.
Ed, the sooner I get through this, the sooner we get to go drink our canned sake. Dinesh Chandra is with us now, and he's the new CEO of Windfall Geotech. How does that tie into the last conversation? Well, it's simple. He was the president of Patriot One. Not can't remember. Patriot One Technologies. Dinesh Chandra joins me now. He is the chairman of Windfall Geotech, Inc. Dinesh, welcome back.
Good to see you, man.
Yeah, it's great to see you too, Dinesh. You have your fingers in so many pies. Tell me about Windfall Geotech.
Windfall Geotech is a geotechnology firm. So we've spent the last 15 years in the mining sector using artificial intelligence and machine learning for digital exploration. The biggest challenge in mining is limited capital, trying to find what amounts to a pot of gold in a very, very large claim area. So what the card system was able to do is identify and shrink the area of exploration, thereby getting better ROI for investors, and also allowing junior mining companies to be able to progressively go back to market without investing too much upfront.
So what is the essence of the technology? Is it statistical analysis?
It's a combination of different factors. It is machine learning, so anomaly detection. The way that the technology works is that it understands a known good context. So if you have, as Michelle, our CEO says, the best place to find a mine is next to a mine. And so if we know we have a great geological context that has found mineralization in the past, we're able to then look for a signature that would, in a large claim, for example, that has a similar mineralization pattern.
Sure.
And we use multiple sensor technologies in order to do that. And so that's a very interesting application to the mining sector.
So it's like artificial intelligence for mining.
Yeah. Awesome. Excellent. I didn't even pay you to say that.
No, you didn't, but you could. No, okay. So give me an example of the technology succeeding in actually finding a deposit.
So we've done over 86 projects over 15 years, over 30 discoveries. That's the great thing, and what really attracted me to this company post my involvement with Patriot was the fact that I was looking for an organization that had a proven technology that could potentially be applied to other markets. And there's very few things in AI machine learning that time and data can't solve. And majority of the players out there in the marketplace today are brand new, or they haven't got the historical track record of projects that Windfall has, specifically the cards platform. So I was like, okay, so this is something that's proven. This is technology that has, that has made significant discoveries over the course of the last 15 years. What else could we use this for? Because there's a lot of really valuable things in the ground. Yeah. Mineralization, of course, is one, but there's a lot of other stuff too. And with my background in the defense and security sector, I was thinking through what are the big problems. We talk a lot about at Patriot about the scourge of concealed weapons and the pain it causes families. Well, an equally large pain is the scourge of landmines, and we've seen a lot over the last few years of organizations posting out about young families and children getting maimed and killed by landmines that were placed 50 years ago or 70 years ago. So I saw some very a potential for some great social good with a proven technology and a huge market. Around $700 million roughly was spent last year just trying to clear the existing problem of landmines, and 100 million landmines out there. So if you're really good at finding stuff in the ground, and we can find gold and copper and silver and zinc, what about, and that's hundreds if not thousands of feet in the ground, what about a disc this big that's 6 inches under the ground? How could we use that same algorithm to find those and thereby maybe make a big difference in some people's lives? And so that's what got me thinking. So in spring of last year, some common friends of ours asked me to go and take a look at this company. I flew up to Brossard. I got to spend some time with the team there, the developers, and I saw, you know what? These guys have got something. Now it really comes down to, just because you've got a great technology, that doesn't create a great company. So now what we need to do is we need to put that awesome core technology and build a great company around it. So that's what we've been doing over the last 6 months. We've been signing contracts, getting as close as we can to cash flow positive, and now, as we announced this morning, we've completed our first drone-based landmine detection test. And so we are now at a place where we can identify, albeit it's a very large anti-tank mine, but it's the first step in being able to use drones and proven mining surveying technologies with our cards algorithm to maybe deal with this very, very painful problem.
You bet. Okay, so you're saying that this can be used in mining, but it's also got an application for landmine detection. How many landmines are there still out there?
100 million as per the last count, and it's growing by tens of thousands every year.
Wow, who's spreading landmines at this point?
It's pretty horrible to think, but a lot of people are. In fact,
Really?
It's one of those things where you think this is a World War I problem, right? Right? Why do we need landmines now? But it's still
So
very
obviously
much
in war zones like Syria, probably.
Syria, Yemen, Bosnia, Northern Africa, Cambodia, Vietnam, parts of northern India, parts of China. Like this is the 86 countries have current contaminated zones. And
how much is spent now globally on clearing landmines?
so last year, roughly $700 million US last year.
Really?
It's estimated that the global problem is a $100 billion problem. And what's preventing the mass adoption of technology is the fact that current solutions are ground-based. The analogy I use is when we started mining, what did geologists do? They went and walked, right? The claim. You look You tried to see if you could hit a few rocks and see something,
Right.
right? And then along came aircraft.
Yeah.
And you had to pay for this very expensive plane, who then, took a survey. And then a few years ago, drones showed up, and everything changed in mining. It's the exact same thing happening in the landmine industry up till even now. There's no drone-based solution that is commercial in the market, but drones exist. They're now economical. We can use those surveying techniques. So we don't have to take a dog, which is currently, believe it or not, the best way to go and search for landmines is an operator with a dog sniffing for explosives. I mean, horrible. It feels like World War I stuff.
Does the dog get blown up?
I mean, hopefully not.
Yeah,
but
no kidding.
It's not nice for the
Sure.
operator or the service animal. So our objective is to use technology, drones, sensors that are proven in the mining context with a proven AI-based algorithm to try to take a lot of the threat out of this problem. And we've just started down that road.
Sure. So this is a commercial-ready technology.
The components are all commercial ready. No one has put them together.
Okay.
So that's where we are at the current stage in our testing. Is we have commercial grade drones, we have sensors, LiDAR, mag, thermal, used every day in the mining sector. So we don't need to develop new sensors. We don't need to get new certification. You remember with Patriot, we had to develop a whole bunch of new technology. No, this stuff is being used every day in exploration to get. So that's a great advantage. It's also a great accelerator of the business plan. What's not been tested is putting these pieces together with a qualified operator to be able in Yemen or in Bosnia or in Northern Africa to be able to operate those very tight survey lines so that we can get quality data to be able to apply to the algorithm.
Well, that's fantastic. All right. So then how soon until this is commercially producing capital or revenue, rather?
Revenue, yeah. So there's, the story is very similar to the Patriot story. There's some pretty, well-defined gates. The first gate is a validated, independently validated field trial, which is the stage we're at now.
Okay. So that's happening in 2020.
That's happening, probably before the summer.
Great.
And with that comes partnerships with commercial grade drone manufacturers, preferably ones with existing relationships with defense contractors, and also surveying companies to help us operate the drone. We're a software company,
Right.
so we need somebody to help us with that. So those partnerships are what Michelle and I are actively engaged in right now. We've done our first test. Good news, we found something. We were able to use our combination of drone plus sensor plus algorithm to be able to identify that this is viable prototype. Taking it from prototype to commercial technology is the first step. But that's not the last step, because you know how it works. You're going to get in, and governments are going to go, well, prove it to me. So then paid pilots become the next step. And so we expect to be in the paid pilot arena by the end of the year, end of the calendar year. And then leveraging what I believe are great relationships that we've built through the development of the Patriot technology, go back to some of those channel partners and say, look, we have something new. Majority of the Patriot channel partners were ex-military. They've lived the experience of landmine and unexploded ordnance daily in their professional careers, so they understand how difficult it is. And I genuinely believe if we can provide a great technology with a good revenue share platform for them, they'll take on the business.
Well, sounds great, Dinesh. You've done it before, and I'm glad to see you're going to do it again. Thanks very much for joining me today.
Thank you very much, James. Great to see you again.
You bet. If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment. Don't play Hey, anyways, so now, following right along on the heels of Dinesh Kandan Chadha, Bruce Campbell joins us for the StoneCastle Investment Management Weekly Cannabis Update. Bruce Campbell joins us now from StoneCastle Asset Management for the StoneCastle Asset Management Weekly Cannabis Update. Bruce, welcome.
Yeah, thanks for having me back.
Bruce, it's an action-packed week in the cannabis space, though not necessarily on the stock side. Let's start with the departure of Mr. Terry Booth, the founder and CEO of Aurora Cannabis. How does that influence your impression of what's ahead for Aurora and the cannabis sector more broadly?
Well, if you look at, this has been a pretty consistent theme here now. Really, Bruce Linton was the first to go, but we've seen it, continually across the board. You can look at, Supreme, you can look at Weed MD, now, Aurora, And it seems like, the visionaries that started these businesses are now, being asked or being pushed aside in order for management that's coming in that's probably going to be a little bit more fiscally responsible, I think, one. And two is probably going to have a vision of profitability in the shorter term than they've had. So the rumors about Terry Booth have been circulating for, probably, I would say, over 6 months now. And I think, obviously what really probably got the ball rolling for a lot of these boards is that, once you see one or two companies doing it, then, hey, you feel like you can probably do it as well. So it's, it's not, I guess, too surprising when I read the headlines yesterday, or I got some messages from people saying that the rumor was that he was going to be asked to resign or retire, then I wasn't too surprised.
So would you say that the raft of layoffs and CEO departures is indicative of a continuing fundamental weakness in the sector due to an overbuild of capacity?
Yeah, I mean, that certainly seems to be the case, right? I mean, all of these companies were ramping up and hiring, and they really couldn't get employees fast enough if you go back a year ago. And, fast forward to now, and it seems like it's gone from being absolute euphoria to complete depression. And it probably lies somewhere in the middle for the majority of the companies. But, I think now they're taking the opportunity to just rationalize and say, like, look, like, let's clean house and rationalize and cut people that, maybe aren't necessarily needed at this point in time. Maybe we add them back down the road, but we need to be fiscally responsible. We're burning through too much cash and we can't raise it anymore, and so we need to make changes.
Right. So do you think that this is going to ultimately be a good thing for the sector?
Well, I mean, the one thing that you look at, and this is, not just the cannabis sector, but, really any company, that typically the entrepreneur that starts the company isn't ultimately the CEO who is the execution person at the company. Quite often the CEO will stay on, or the founder will stay on as the chairman, and provide sort of strategic big picture thinking, but they don't typically operate the companies. It's not sort of the same skill set to be super entrepreneurial and coming up with concepts and then sort of digging down and operating. And so it probably is good for the sector in that, we've got to a place now where we have overcapacity. There's going to be way more cannabis produced in the next, probably in 24 months than we can use here in Canada. Obviously, the prices are going to compress. And, now obviously the big thing is to move into these 2.0 products and to move probably beyond Canada. And so, a CEO that comes in that's probably more well-heeled in business management and execution and operations is probably going to be a better fit for shareholders now than that entrepreneur who had the sort of big idea.
Yeah, you bet. Okay, now we've got Doug Ford, who's sort of making some noise about LPs in Ontario. What's going on with him?
Well, there's been actually a fair bit in Ontario that's going on. One of the announcements, and this didn't have to do with Doug Ford, but they talked about this farm gate, which was initially everyone was quite excited about. When you sort of read the details, well, no, they could sell from their cultivation facility, but it first had to be sold to Ontario Cannabis, and then it could be sold through there. So it's just kind of like a middleman that gets in the way. So that was one thing. But Doug Ford was out talking about all the criticism that there's been on Ontario and the fact that the retail locations are way behind everyone else. And he's basically said, like, hey, you guys all need to cool your jets here, because we're going to have more retail locations than anywhere else across the country by the end of the year. So everybody back off. And that is what's needed. I mean, if you look at the 2.0 sales so far, the edibles in most places are selling out in record time. I was with an LP on Wednesday, and they were talking about some of the channel checks that they've done, And some of the edibles, especially the gummies, are going in like 2 hours. So if they show up at a location, people are waiting in line knowing that they're going to show up on a certain day, and they're all sold out within a couple of hours. So that's exactly what we need. Is we need Doug Ford to to step up and get well beyond the, I think, 24 locations that there are now, and get into the hundreds, and then get retail distribution. And that's what's going to probably solve a lot of the issues for the LPs as far as cash flow and earnings.
Right. Well, that's interesting. Now, do you think Ontario is going to sort of be able to solve the revenue issues of most LPs who are dominant there? And how do you juxtapose the Ontario market to one like Massachusetts or Illinois?
Yeah, so I don't think it's going to solve the problem for every single LP, because there's always going to be winners and losers, and there's going to be some companies that just weren't built for this environment where you see cost pressure and consolidation. But that being said, I mean, there's always a market for high end and low end, and just like if we looked at the wine or beer market, there's wine that's sold out of a box that's super cheap that appeals to a certain market, and there's super rare expensive bottles that are for a specific market, and everything kind of in between. And if you build your LP to factor into that different niche, and you have your specific niche and you know what it is, then you should be okay. Does opening everything up solve all of the problems for all the LPs? Of course not. It certainly will help the industry, and it will drive higher sales, but then you're going to see, just based on, supply and demand and efficiency, who's the winners and losers. If you were to compare it to, something like Massachusetts, if you look at that market, that's only been legal rec here for a year now, and they've already seen, about $500 million in sales, which, if you think about where Canada is, we're run rate right now probably 1.3 to 1.5 billion annually. So, there's only 7 million people in Massachusetts versus what there are in Canada. So, obviously we can see a lot higher sales if we get the retail distribution. If you compare that obviously to the population of Ontario, that population is just a little bit less than what we're seeing in Ontario, and so you could see sales in Ontario in sort of that $600-700 million range, and obviously if we get to the 5 billion that everyone's projecting, then they probably is even higher in Ontario.
Yeah, you bet. All right, Bruce. Well, that's a great update as per usual. We'll leave it there for now and come back to you next week. Thanks very much for joining us today.
Okay, thanks a lot, guys.
If you like the show, you'll love our website. Visit us at www.midasletter.com for interviews with key CEOs, cannabis news, and to subscribe to our newsletter. All right, just finished the article of the day, Alex, and coming up here, last but not least, we're going to hear from an Israeli medical cannabis company. This is Iris Binkovich joins us now from Inocan. I'm joined now by Inocan Pharma CEO Iris Binkovich. Iris, welcome.
Thank you.
Iris, let's start with an overview. What is the business of Inocan Pharma?
Inocan is composed of 3 different segments. Inocan is innovation cannabis. The first segment we are active in, we are developing with the Hebrew University in Jerusalem a platform that will increase the bioavailability of cannabinoids into the body. We are actually inventing a platform that will enable injection of cannabinoids. Today, taken orally, 80% is being destroyed by enzymes of the liver. So in order to overcome and enable delivery of oil molecules directly to the blood, we have developed this system.
Very interesting. And so this is strictly a biotechnology company in the cannabis space.
It's composed of, as I said, of 3. This is one segment.
Okay. What are the other 2?
The other 2 is we have developed patent pending topicals targeting specific skin conditions like pain relief and anti-itch, which we have finalized the development. They're now being manufactured in the US and Portugal for the European market. And the last business of activity, we have developed derma products, derma cosmetic products, utilizing the benefits of the CBD, and this is just based on CBD, for specific skin disease. So we finished the production of the first line of products. We had just signed, and I'm very happy to announce, a distribution agreement with the UK distributor. So we're making progress step by step. We try.
Great. And what is the third one?
So we have topicals for skin conditions and the cosmetics.
Okay. Oh, interesting. So you're quite a diversified company, really.
I think for the short term, bringing revenues, the topicals, this is the path that will bring the revenues. The pharma side, we will be able to start discussions with the big pharma companies within 18 to 24 months.
Okay. Okay. So how do you source the cannabinoids that go into your products?
Regarding the pharma project, we work with API, active pharmaceutical ingredients. So this is pure, coming from a specific source. Now we source it from Germany. Regarding our topicals, it is being produced where it's sourced. So from the US market, we source it from local suppliers. In Portugal, from a European source. So less shipping.
I see. So you're basically sourcing isolates of THC and CBD?
No, just CBD.
Just CBD?
Just CBD. Regarding regulation-wise, this is much more sophisticated. And the benefit of the CBD in combined with the active ingredients we are using, with the technology we are putting in the formulation, is satisfied.
Okay, so how does, what is the status of your revenue generation at this point?
So we are a young company, 2 years already, just established within 2 years. When public in those 2 years, got a substantial investment. We finished the first line of products regarding development. Now they're being produced. First products are going to reach the market in March, and then the first revenues. So March is the first month of getting revenues to the company.
Interesting. And so you're going to start with markets in Israel?
Not Israel. Israel, you cannot sell topicals and cosmetic with CBD, like in Canada, that you can't.
Right.
The first market is going to be Europe and the States, where we have already in place the distribution in the UK and Ireland. I have been talking with more than a dozen distribution worldwide, Asia, Europe, and the States. So between March and May, we would see much more companies joining our partnership network.
Sure. How much money more do you need to raise before you get to a profitable state?
This depends on sales on one aspect, but remember we are a pharma company. We will always need money for our research and development. So this is a much more big aspect. This is the real value of the company. Now regarding the university project, we are in the second phase because we accomplished a lot. Remember, we talk about developing a platform. So the most challenging and what time we spend on is loading high amount of cannabinoids in the capsule so it will be applicable to injection for different clinical situations. So we managed to do this. We also have developed several families that indicates that we can have a control release. So let's say, what are the applications? Why do we need to inject? So imagine a kid with epilepsy, instead of having somebody to administrate, he can have a smartwatch, insulin pump. Once the seizure starts, the watch will tell the pump, which inside you have a suspension of lock CBD, to inject a specific amount directly to the blood. So it will going to be fast relief from the seizure. You can have a pain relief shot, and over a certain period of time, you would have a consistent amount of cannabinoids released into the blood. So this is just 2 indications. We are developing via this platform several indications. So it depends on us. Selling now, it's going to be too low.
Right.
We are going to be ready, from our point of view, between 18 and 24 months, we would have sufficient data to start the discussion. The professor we are working with in the University, Hebrew University of Jerusalem, Professor Chezi Bernholz, already developed a similar drug for Johnson & Johnson named Doxil. It's an anti-cancer drug. Based on this technology, it's a similar, but it's completely different. We patent pending the technology regarding cannabinoids. So eventually, we can use this as a very wide platform for developing a new drug, targeting drugs.
Okay. Is this a system that will have to be approved by the FDA before it can be used in the U.S.?
Yes.
Okay, so there's you have ahead of you the whole process of going through successive trials and everything.
So, as experienced team, we are coming from a pharma background. Our active chairman, he was the CEO of Teva Israel for 21 years. So we want to bring this to a proof of concept in animals and then license this or joint venture with a big pharma company, which they know how to do the FDA registration and everything. We are preparing everything based on the FDA requirements, because this has been done before in the department for different drugs. So, and we have connections to the pharma industry between ourselves in the management team and partners.
Interesting. So then, what is the process, like the timeline? You think that's within the 2-year timeline to get the drugs and the system approved by the FDA?
No.
Oh.
We would have sufficient file data, enough information to interest the big pharma companies. Eventually a deal could be down payments of several millions, and then royalties, and then milestones.
So basically, you'd make a deal with a large pharma company who would become your financial sponsor in exchange for rights to the product.
Yes, generally. But imagine you can multiply this by 4, 5, or 10 because it's a platform.
Right.
We can put inside CBD with THC, CBD with other medical molecules. So it's a new way of administration.
Yeah, that's intriguing. Have you developed any sort of relationships with Health Canada in this regard?
Health Canada is still, I don't know if it's struggling, is trying to set the rules regarding the topicals. How well regarding the pharma, we are still in the development stage of it, so it would take some time. It's too early to discuss it now.
Okay, well, that's a great introduction to the company. Thank you very much for joining us today. We'll come back to you soon.
Thank you.
This has been our show for this week. Next week, we are going to rank the cannabis companies in the world according to which companies are most likely to go bankrupt soonest. So we'll start with number 1 and we'll go to number 10 and we'll give you a brief analysis as to why we think each of these companies is facing existential doom. That's next week, people. Tune in on Friday at 3.